Rajiv, well, it seems to me that the overarching focus for investors in India, whether it's foreign or domestic, really seems to be centred on the Indian consumption narrative looking strong, getting stronger, whether it's tier 3 cities in the rural areas. How best then do you express that in stock market allocation? And are valuations becoming an issue now?
Valuation have been issue in India forever. And the most important part is investor comes to in India not for valuation or value. People come to India for growth. India and US are the two markets which have been known as a growth compounder or a sustainable earning growth market. Even when we look at the earning cycles in India recently, like how the trend has, the cyclicalities is getting reduced over here, or you can say that is also leading to lower risk premium and volatility into the markets overall. So taking that into account, like sectors which are supposed to give you higher growth will be more on the domestic demand side, or which is being supported by consumption. The primary one over here will be still financials for us. Why financials? Even if growth is going to come with a lag, like we do anticipate private banks may be marginally disappoint or in line in this upcoming earnings season. But post a trough in the second quarter of this fiscal year, we are expecting an inflection point in earnings for the financial space, and plus policy making support there around the corner. Financials is the right way to approach of investing into India. Remember, once the consumption picks up, it will lead to higher loan growth demand from MSME space, household space, mid and small cap space. So that's the prime one, and then followed by your consumer staples, consumer discretionary, real estate, hospitals. So that's where we think is the bucket you need to play the India consumption story.
Understood. And within the financials bucket, Rajiv, how are you approaching the NBFCs? Yesterday we saw a stunning debut from HDB. Are bad loans and non-performing assets, is that a concern for you? And to what degree is that going to undermine the case for financials?
No, looking at the recent financial stability report from the RBI, that has eased, I believe, a lot of concerns for the people on the GNPA side, for the scheduled commercial bank, and most importantly, for your fintech NBFCs and the NBFCs which are on the housing finance company side and the other one overall, because it clearly shows the trend that the asset quality issues are coming down. Already, if you look for a scheduled commercial banks also, the NPS levels are at a decadal or a record low over there. The concerns were more there on the NBFC side. With the recent financial stability report shows it is still not a big issue, and it is coming down even on the unsecured lending side per se too. So NBFCs within our pecking order from next 6 to 12 month perspective remain the number one play, because they know how to increase the loan book again overall. That's number one. And number two, they are the biggest beneficiary of reduction in cost of funds plus the net liquidity addition that's being done by RBI. And as I've said earlier, the biggest beneficiary of the rate reduction will not be your large cap corporates who have already delivered a lot. It will be your household, it will be your MSME, it will be mid and the small cap spaces who were paying the higher amount of an interest on the loan. And if you look at the recent credit growth data print also, there is a silver lining where the credit growth has started picking up again. It is the same MSME and the household space. So taking that into account, I believe NBFCs are the one which will be the leader, then followed by your private banks and then by your PSU banks.
Understood, Rajiv. So put it all together, does it look like we are in for another record high for the Nifty? At what point are we going to reach that? And where then does it put your end-year target for the benchmark?
No, very much, Shri. We are in getting into a Goldilocks scenario for India. And our base case for India is 26,500. But I'll not be surprised in this fiscal year, and probably within the next 6 to 9 months, Nifty will be trading between our base case and bull case. Base case is 26,500, bull case is 30,000. We have seen a lot of Asia and emerging markets have started getting towards our bull case side, and India has been underperformer on an year-to-date term. I'll not be surprised within next 3 to 6 months, India close that underperformance and start inching towards our bull case target of 30,000 on Nifty.